Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Something we were discussing off air. There's a class action lawsuit against the BC foreign buyer tax. I wasn't aware of it.
Yeah, I think if you remember back when it first came out, on the show here, I warned, I'm not saying I warned the government, but I'm saying is my concern of the way that they brought that tax in was that I believed it was against WTO trade rules. Now, my understanding was, back then when I made the comments on the show, it was from my limited understanding of selling real estate for a couple of decades, where there were certain rules the government made us follow when dealing with foreign buyers. And one of those things was that we had to treat foreign buyers fairly and that we had to let foreign buyers purchase Canadian homes. If we did anything against it, we were told at that time, in the province of Ontario anyways, that was against international trade law. We've seen in the paper out your way is that sure enough, you've got a foreign buyer, a Chinese person who purchased a home, who is now suing the government of British Columbia, and they're hoping to form a class action lawsuit based on changing the rules after the purchase. I think they'll win, Jim. I mean, my personal opinion is, unless I was lied to for decades by the government here in Ontario, you cannot. World Trade Organization rules, part of our deal with the WTO is that we cannot stop foreigners from buying our land. It's one of the reasons why I'm not a supporter of these massive trade agreements myself. I'm just simply not a supporter. I'm not saying I'm right or wrong. I'm just saying from a real estate standpoint, I don't believe Canadian homes should be purchased by foreign owners. That's just what I believe. I believe once we have a surplus of homes, yeah, let them go ahead and buy. But until that surplus happens, which it's not going to happen, if we're going to have a nice immigration policy where we welcome new people into Canada, because they all need to be housed, and as our population ages, the millennials need to get a home. I don't believe you should let foreign buyers buy Canadian real estate. That said, if it's part of an international trade agreement that we have signed, and if that is the truth, you're going to have to eat what you've sown. That's just the way it goes.
Well, we also now have a second home tax in BC. The people were worried that their cottages would be taxed, and now the provincial government is saying, well, no, if you're a BC citizen, we won't tax it, but if you're from outside of BC, even though you're a Canadian, we're going to put a tax on it. Well, I thought the Canadian Constitution, the BNA Act, says that you cannot put up interprovincial trade barriers, that there shall be free trade within Canada. Well, if that's the case, then could they not also have a class action suit if you're from Alberta or Manitoba and have a cottage in BC? Could you not use the same logic and say, well, it's unconstitutional to put a special tax on us?
Well, maybe what they're really saying is that we're not Canadian citizens at all. Maybe what they're trying to say is, you're a BC citizen, you're an Alberta citizen, you're an Ontario citizen. You're not really Canadian at all. I cannot believe, when I heard the separation of residency of Canadians, in other words, what city do you live in is going to dictate whether or not you can aid, what taxes that you're going to pay in our city. To me, Jim, it's just unfathomable that a Canadian is anything but a Canadian. I live in Ontario here, and I've got, my niece has just moved out to British Columbia. My nephew has just moved out to British Columbia. They're both, one's in their 30s and newly married, and the other one is a single guy. He's in his early 40s, and he's moved out there for a telecommunications career. Great job opportunities out in British Columbia. If either of their parents wants to buy a cottage in British Columbia, to be able to go out and visit them for 6 months of the year, the BC government is now saying, no, you're a second-class citizen. You're a second-class citizen in British Columbia. We are going to tax you more than we are the Canadian citizens who live in British Columbia. I understand the governments in British Columbia have a major problem. They want to be green, and they don't want to build homes. Now, you have never heard them say, let's build 5% growth of our housing stock over the next 10 years in a green manner. We are going to use green building materials. We are going to have a green money supply, fund the building of these houses. We are going to grow our housing stock to meet the needs of our citizens of British Columbia. And we're going to build the housing stock so it reflects how our demographics are changing over the next decade and into the 2 or 3 decades after that. And we're going to do it so that people's quality of life is improved. We are not going to be forcing children to grow up in condominium high-rises on a asphalt concrete base with no grass or trees unless that's the choice that their parents make. No, it's more important that green in Vancouver means the worms in the fields get to revel in the sunshine every day while the children play on asphalt. It's just absurd to me, Jim. It is 2018. There are viable green building techniques out there where you can actually build a single detached home that does not cause any problems with the environment. It can actually offset some of the damage that is caused when you live in a high-rise condo building.
Well, Ross, what the BC government is also doing, again, BC Hydro is supposed to be at arm's length, but the government can pass legislation. BC Hydro right now says it does not want to pay for any excess power that your solar panels generate. In California, it's the law that any new home that's built has to have solar panels to generate power. Now, who's being more green, California or BC?
Well, I'm going to tell you they're both lunatics from a home ownership perspective, Jim. Any new home built in Canada from 2020 forward should be a net zero energy consumer. Whether it produces excess energy or not, I don't care. What I do care is there is no need in 2020 to be adding housing stock that causes more expenses on the existing infrastructure, whether it be hydro, whether it be sewer systems, whether it be school system, whatever. There is no need in 2020 for that to happen any longer. When your thought is constrained by old thinking, when you believe in myths, when you believe in anecdotes, when you do not do the research, when you have research that is generated for a biased opinion from the start, this is where all of these problems come from. You have a generation of young British Columbians in their 30s right now who have been force-fed so much propaganda about the housing market, they don't know what to do. they have elected politicians who haven't given them a solution. You are not going to make affordable housing by having affordable housing built. Affordable housing only happens when you grow the housing stock beyond the needs of the demographic, what demographics dictate in your community. The solution is so simple. Simply grow the housing stock more than what is needed. That automatically makes sure further house price gains don't take place. Remember, you are already having a house price correction going on. I'm sure we're going to talk about that in the show in a couple minutes here.
Yeah.
You already have house prices that are going to drop. This is a done deal. It was sealed over 2 years ago. This is unavoidable. This is going to happen. The way to make sure that it doesn't repeat itself is to grow your housing stock. Yes, those houses are going to need space. Yes, maybe some of the farmland that is in limited space in British Columbia, there is going to have to be a rational decision whether or not that farmland should be used to house the population. If that house population is going to have a lesser impact on the environment, and it's going to have a better quality of life for the people of British Columbia. Maybe the farms need to look at going vertical instead of housing families living on top of one of another. I'm not saying I have the solution. All I'm saying is people need to explore the wide range of options that are out there. There is no reason, Jim. There is no reason that British Columbia, specifically the Greater Vancouver area, does not lead the entire planet when it comes to housing stock being built to reflect the needs of a population. The job growth, the income growth, the world-class, the world-leading innovations that could come from Vancouver are just, in my mind, Jim, they're just phenomenal. Yet all I hear is whining from the politicians, saying stupid, I'm going to use the word stupid, same stupid housing reports that get released that are filled with myths, the same propaganda from the real estate boards, the same propaganda from the banks, the credit unions, the same propaganda from everybody who has a different point of view that they want to get across. You need to step back and look at this from what's right for the people. What's right for the people today and what's going to be right for the people 50 years from now. There is no immediate short-term fix other than growing your housing stock as rapidly as possible in the most life-fulfilling way possible. Unfortunately, what I'm saying is beyond the grasp of anybody we're going to elect in politics today.
We'll have more with Ross Kay right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Ross Kay. Ross, what about the Ontario housing market? What kind of a change is taking place there?
Yes, that's the big question of the day, Jim. So the Ontario housing market, it's not a pretty sight. We have a housing market here that is in a classic rollover situation. It is a housing market that was in oversold condition as the market turned over, same as Calgary was back in 2018. And the consequences have been hitting home here in Ontario now, Jim. For I guess this is the fifth month where the consequences have begun to hit home. We do a metric, Jim, called BAC. It's the BAC ratio, or below acquisition cost. And all it does, Jim, is it measures what percentage of homes have sold that the people who bought them couldn't turn around and sell them tomorrow and recover all of the costs they paid on the day that they bought the house. Okay, so you hear lots of talk out in the housing myth world about being underwater. Well, underwater, their definition, they always tie it to mortgage debt. So we don't tie housing markets being underwater to mortgage debt. We tie it to what it originally cost you to buy the house. That's how we tie it, which is called BAC, B-A-C, below acquisition cost. That metric is really, really important because it tells you what kind of pressure and risk there is in a housing market any given moment in time. Traditionally, when someone buys a house, they should be expecting that it's going to take 18 months to 24 months in an ordinary housing market. Ordinary mean over 25 years a period of time. What happens over that full 25 years spread out evenly. So in other words, there's going to be times when you shouldn't be buying houses. There's going to be other times when you should be buying houses. And depending on when you buy, time the market, you're going to have a massive difference in how long it takes you to break even, if you ever do break even in some cases. In Ontario today, our BAC metric for Ontario already shows us, Jim, that there are already over 500,000 recent home buyers who could not sell their house and recoup their purchase costs. To us, Jim, that's called being underwater. There are 500,000 Ontario families who have purchased their home recently who could not sell their house and get their money back.
That's almost a city of Winnipeg's worth of people.
It's a staggering number. Now we also do, because it's a ratio, we measure it against the housing stock. I'm not going to give you those exact numbers because that is part of our IP, because that allows us to maintain. We know where these numbers are supposed to be. We know how the risk is measured. That doesn't preclude me from telling your listeners that there are over 500,000 Ontario families who could not sell their house for what they paid for it. I will also tell you, Jim, in Alberta, as of April, there are over 400,000 families who could not sell their house for what they paid for it. 400,000 in just the province of Alberta. I'll also tell you in British Columbia, contrary to what everybody has said, right now there are about 230,000 families who purchased a home in British Columbia recently where they couldn't sell it and recoup all of the costs that they spent on the day they moved into the house. I'm not talking interest costs, any of that. I'm talking about the actual costs that they incurred on the day that they moved in. 230. Now, you take 230 in British Columbia. You take 400,000 in Alberta. You take another 500,000 in Ontario. And then we take into Quebec, because Quebec, it's very, very hard for people to get their money back out of their house. There are over 1 million Canadian families today who could not sell their house and get what they paid back for it. 1 million families. Yet I hear on the news banks bragging about squeezing the Canadian consumer with higher interest rates. I hear the Canadian banks bragging about, even though their mortgage originations are falling, the fact that the Bank of Canada raises interest rates a quarter of a point offsets that the loss in mortgage revenue. While 1 million Canadian families are now underwater. They could not get what they paid to move into the home that they now own. Your listeners need to understand, when you're purchasing a home, you need a 2-year forecast on the housing market and the price of the home that you're paying, so you have an idea how long it will take you to break even. Or you can listen to realtors in the banks who quietly let you pay down your mortgage debt quickly enough and rapidly enough so that you're not underwater by their measurements. And their measurement is you can sell your house and you've got enough money to cover the remaining mortgage outstanding. You can walk away with $0 in your pocket. I'm talking about when you move, the day you move into your house, how long are you going to have to own it before the market would allow you to get back what you paid for it in your pocket? Right now, there are over 1 million Canadian families, and it's substantially more. I'm not going to give the number here over the show, and I'm not going to give you the ratio because those are both our ID. But over 1 million Canadian families could not get their money back out of their house if they wanted to sell it today. And Jim, already in May, we're 3 weeks in, 4 weeks into May, the end of the month is coming. The new real estate numbers are going to be released. I know already we're going to be adding about another 100,000 families to the list. And I'm telling you, the 1 million that I'm talking about right here on the show is an understatement. What your listeners need to understand is this. The propaganda and BS that is out there that encourages you to make a bad homeownership decision is coming home to roost right now. I can sit down with anyone with a calculator and the housing data that I have in front of me, and I can show you the over 1 million families who now, that they could not get back out of their house what they paid for it. And that number is now growing. So as they are losing money daily, it's going to take that much longer on the other end for them just to break even. And once you break even, then you're going to pray that you start to make a gain. Inflation, of course, is a nasty little factor that homeowners never ever talk about. Realtors never talk about. Banks never talk. They never talk about the nasty side of inflation, which only matters when housing prices are correcting. Because in the upswing, it actually works to your advantage. That's what we're looking at in Ontario here, Jim. In Ontario, the numbers are staggering. What has happened in a very short period of time. This loss, Jim, has all been enacted over the last 5 months. The damage has been done just in 5 months. That has never happened in Ontario's history, Jim.
We'll have more.
Go ahead.
I was just going to say, Ross, we'll discuss more of this right after the break.
No problem.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Ross Kay. Ross, back on Friday, Macquarie Capital Markets warned Canada was at risk of a recession because of what's happening in the housing market. Can you maybe explain why something that's wrapped up in a house could actually affect the national economy?
So, CMHC had that 200-page report that I criticized here on the show before as being just a hilarious bunch of junk that got produced by an organization that got an extra $250 million from the federal government. We did a report and we released it 9 days prior to the Macquarie report coming out. 9 days prior to the Macquarie report coming out, you did not hear the word recession anywhere in Canada. Now, we track IP addresses for all of our subscribers. We know where they're coming from. We need to know that so that realtors and certain untowards people do not get access to our this is our professional grade service, Jim, information. They have had that report in their hands now for 9 days. That report explained what CMHC could not explain. It explained how housing prices went up 74%. The 40% that CMHC was claiming in the report was actually an inflation-adjusted number. We used the raw number at 74%. We explained all 74%. CMHC couldn't even explain 50% of it. Like 50% of the 35% of 35%, CMHC couldn't explain. We explained about 74%. It's a black and white issue. That gives you credibility when you're talking to professional people. That gives you credibility when you're talking to financial advisors. That gives you credibility when you're talking to CROs. What we know is this, Jim. Right now, by all of our metrics, Ontario is headed for a recession. A recession of the magnitude not seen since 1990. Now the scary part begins. Because the recession that I'm talking about, Jim, back in 1990, the market rolled over within 2 months of where it rolled over this year when you're comparing an election date. In 1990, Ontarians elected an NDP government. That government was unprepared for a housing market correcting and the financial impact on the economy of a correcting housing market. There was universal ignorance on the impact of the housing market on the national economy. In other shows, recently, I have explained to your listeners, we do not believe in the business cycle. We believe in the realty cycle. We believe the realty cycle drives the business cycle. Others have tried to come up with the credit cycle. Well, it's not a credit cycle. If you want to look at the truth, it's a wealth cycle. Because as housing prices drop, net wealth drops. And I'm going to drop a bombshell on your listeners right now, Jim. It's probably near the end of the show here. The members on the Wealthy Homeowner, they have on their dashboards each province of Ontario. So if you live in Ontario, you have a provincial dashboard portion, and it gives you the numbers. Our Ontario members, on the Ontario numbers right now, when they go to the Ontario page since last week, it shows there has been a $100 billion drop in net wealth by Ontario homeowners in the last 4 months. $100 billion. This is not the metric that we used in British Columbia, which still requires time before people are going to see that metric that we announced back in 2016. This is immediate metrics in Ontario, Jim, because the Ontario market was in an oversold condition. That means the second wave of capital that came into the Greater Vancouver and the British Columbia markets after the initial crash happened is not going to come into Ontario. That extra capital, that buffer, that extra illusion that could create people some more bad home buying decisions is not in Ontario. That $100 billion is going to grow next month. And it's probably going to increase over another $20 billion. When you remove $100 billion of net wealth from the citizens of Ontario, historically, you've had a recession follow it. You can remove it from the stock market, or you can remove it from the housing market. I want to leave your listeners with one thing here today, Jim, before we go. If you had invested in gold in March of 2010, now, March of 2010, from a real estate standpoint, is a very important date. I'm not going to tell you why it's important. Hopefully you can trust what I've said here on the show for the last couple of years, and you just believe me that March of 2010 was a very important date for the housing market. You could have invested in gold in March of 2010. You could have sold that gold today and returned 50% return. Your gold would have been worth 50% more today than had you bought it March of 2010. The Canadian, you could have bought a portfolio of homes across Canada. They would have been worth 50% more today than they were March of 2010. When you hear the crazy talk about housing prices going up forever, housing markets being the best investment of your lifetime, housing this, housing that, housing that, I just told you gold went up the exact same amount of money as whether you purchased in Ontario or whether you purchased in British Columbia. CMHC didn't know that when they wrote their report in about 2011 to 2016 prices. We did. Because we know when you need to measure a housing market, how you need to measure a housing market, so that you're comparing apples to apples all the time. Ontarians are now worth $100 billion less than they were in January. And there's not a single person, there is not a single company, there is not a single firm in Canada who has announced that, except for what your listeners are hearing on the show today. This is the truth. This is a data-driven number. You cannot avoid this number. Ontario was oversold. It wasn't like British Columbia. It was like Alberta back in 2014. Right now, Jim, Macquarie seems to be agreeing that what Ross K. Realty Consultants has warned about since 2013 is true. The housing market, or the wealth cycle, drives the business cycle, not vice versa. And I think as we come out of this a decade from now, you're going to hear about the wealth cycle. You're not going to hear about the business cycle any longer.
Ross, it really seems that with all these governments adding extra taxes on real estate, saying we want to cool the market, well, as usual, the market has cooled itself, and all these taxes are just punishing people for something that's already happening.
You know, Jim, your listeners, this real estate crap about housing prices always going up forever. The market's going to get the banks saying, the housing market is going to cool and then it's going to get busier again. Okay, your listeners, just think, a 10% increase on a $100,000 house was only $10,000. A 10% increase on $1 million house is $100,000. A 10% increase on a $2 million house is $200,000. The reason why you don't measure housing markets with percentage increase is they hide the truth. In order to pay $100,000 more for a house, you have to be earning a commensurate increase in income to be able to afford to buy that house. And it works the same way in the way down. Don't look at percentages. Look at dollars. Realtors and bankers and analysts and CMHC and the government and those who are taxing you want you to look at percentages. Throw them out the garbage. You care about dollars because dollars pay your bill. You don't have your boss come up to you and say, hey, I'm going to give you a 2.3% raise this year. No, he comes up and says, I'm going to give you a $2 raise this year. There's a reason why homeowners need to talk in dollars and not percentages. The reason is Ontario homeowners are now worth $100 billion less than what they were on January the 1st.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Our popular YouTube channel is Talk Digital Network. You can find us on Twitter at HowStreet. Questions for the show or our guests like Ross can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.